founder and head trader here at Trade Pro Academy. I wanted to introduce myself to you and say hello. We're going to start doing these midday morning market updates every day at 9 a.m. So stay tuned, subscribe to our channel, and I'll keep you posted. The goal of this, the objective, is to update you with news around the globe, what's going to impact the markets, and how that's relevant for your trading, and hopefully give you a better chance to make some profits and to trade a little bit tighter and closer to market sentiment. All right, so a little bit about myself. I started trading in early 2001. I started with foreign exchange or currency trading, mainly trading the gold markets. From there, I started a proprietary trading company with a couple of colleagues. That didn't last. We did really well, but the partnership broke up. And from there, I started really focusing on the retail aspect of trading and becoming an independent trader myself. Joined one of the big 6 banks in Canada, worked there for a long time on the trading floor. And in 2008 and 9, when the economic bubble just collapsed, the housing bubble, I had some really tough conversations with clients, and I had to do something about it. I figured, hey, this was avoidable. There were signs and indicators that led up to that that told you, you know what, there might be something you need to consider or pull out some of your assets on the equity side. I'm getting a similar feeling today in today's market, but what I'm trying to say here is I decided to start Trade Pro Academy with the intent and objective to help the retail trader level the playing field with a professional trader. So that's my entire mission. We have a ton of education and free resources for you to check out and learn how to trade properly the correct way in 2017. It's a new year. It's a new opportunity. There's a lot of volatility, and trading is a key way to capitalize on the stock market ride, as they call it. All right, you might be wondering, who's this bearded guy talking to me? Remember this: if you wear a suit and a tie, you're probably in sales. That's a saying in the business. I don't know one single trader that trades in front of the computer with a suit and tie. This is how I look. It's great to be your own boss, and it comes with its own with its perks. All right, be your own boss, be yourself is what we say. All right, let me take you through the market update. North Korea this morning, there's news overnight actually that they launched 4 ballistic missiles, 3 of which land in the Japanese economic zone, and that's about 260 miles off the coast. That started to put some bearish sentiment into the market early. On the 6 p.m. Globex open last night, 6 p.m. Eastern Central Time, equity markets got nervous, and we saw a 10-handle sell-off really quickly. And it's important because in the last few months, we haven't seen any deep corrective type price action, and we saw a 10-handle drop right on the open. So it's interesting to see the developments for the rest of the day. And other news as well, Deutsche Bank is down 6.9%, now trading about 2% into the pre-market open. The reason being the CEO ditched a new plan, a transitional plan 17 months in, and now has a desire and intention to raise over $8 billion of capital. Shareholders did not like that, and Deutsche Bank is slumping. Those 2 events alone are enough to put some sell-side pressure in the market. Let's see if it holds through the open. Okay, I'm going to talk about patterns as well in a little bit, and I'll show you some markets and analysis also. All right, on Friday, Janet Yellen and Stanley Fischer pretty much gave 2 speeches. The most important was Janet Yellen at 1 p.m. Eastern on the wire. What did Janet say? Janet talks a lot and says nothing, but she did manage to agree with the rest of the Federal Reserve officials, and she's the most important. She is basically the person that you listen to for guidance going forward, and she also confirmed the hawkish stance. The Fed is hawkish. What does that mean? Interest rates are going up. What does that mean? Borrowing capital is going to start to cost more. It's going to start to increase. That puts downside pressure on bonds. We're going to see how that shakes out. So far, the market shrugged it off. I think the threefold hit for this morning is North Korea. That's really important. It's going to start to weigh into the decision. The ballistic missiles. Deutsche Bank is putting some downside pressure. And I think the equity market's going to start and continue to digest this hawkish statement. And we're going to see how traders feel about that on the open. Pay attention to volume. Pay attention to structure and key support zones for your trading, and you're going to do just fine. All right, today's markets, I'm just going to have to look down at this. Before we get into that, rate hike odds are now at 94% for March 15th. Next meeting of the Federal Reserve, March 15th, and they're going to decide whether or not to hike rates. At this point, the market has factored in a rate hike at 94%. So I think the Fed's going to use that opportunity and that confidence from the market and actually do the hike. That's what we're watching for. Let's see how the market disseminates that info leading into the middle of the month. Today's markets in Asia, Japan's down 0.5%, Hong Kong down 0.2%, China down 0.2%, India up 0.8%. European markets, Frankfurt and Paris are down just under 0.5%, London 0.3%, and futures this morning, Dow is down slightly 0.2%, S&P down 0.3%, NASDAQ 0.2%, Crude oil is down 0.7% on news, and we'll talk about that. Gold up 0.3% to $1230.50 per ounce. Interesting thing about gold, Bitcoin on Friday just surpassed the price of gold per ounce. So 1 Bitcoin is now more expensive than 1 ounce of gold. Watch out for that trend as we see how traders feel and how they accept this price zone. All right, we also want to wish a happy birthday to the S&P 500. This isn't major breaking news, but it's a cool stat to throw around the office today. S&P 500 today turned 60 years old as of Saturday with a $2.4 trillion index value. All right, that's more than any other index, and that's interesting on its own. So happy birthday to the S&P. Thank you for allowing me the opportunity to earn a full-time income on your back. Here's news in the oil market. If you're an oil trader, this is very important right now. This is driving a lot of the sentiment on the pit open at 9 a.m. OPEC Secretary General Mohammed Sanusi Barkindo says that, and I'm going to read this, premature to say whether OPEC and non-OPEC producers will extend their production cuts after May. But for now, it's so far so good. The question I have to ask you is, so what? There was a production cut that's in place until the end of May, beginning of June. Did it make a difference? Absolutely not. Crude oil inventories are at record highs, and that's going to put some oversupply and downside pressure into the market. If OPEC and non-OPEC do not renew a production cut agreement, watch out below on oil. They have to renew it at this point just to keep up the sentiment as we move into the tail end of strong seasonality in oil markets. It then goes down towards May, and prices start to go down into the summer before stabilizing. All right, that's OPEC update. Last 2 items here you guys need to know about today. China lowered its annual economic growth target to 6.5%. All right, approximately 6.5%, compared to last year's range, about 6.5 to 7%. Here's a cool stat that I just pulled up today. GDP grew by 6.7% in 2016, and that's the slowest pace in 25 years. So even the great big Chinese economy, the manufacturer of everything, is starting to slow down. That's a concern that we have to watch for. The Chinese president said that the key reasons for this is uncertainty in the economic forum, essentially saying Donald Trump. All right, his protectionism policies are a key concern for us in China. My rebuttal to that is this was GDP in 2016. GDP was already going down. So it's a convenient excuse, but nice try. I think the economy is slowing down. And I hate to be the bearer of bad news. And this isn't terrible news because it's an opportunity for traders, but I think we're starting to hit the tail end of this rally, and we're going to see some downside pressure going into the markets. But remember, seasonality for equities are strong until the beginning of May. So don't let it fool you. Don't short in large size. Never be afraid to try a trade in either direction. If your risk is low, your opportunity is always going to be high. That's one thing I want you to remember. Amateurs anticipate returns. Professionals manage risk. That's how you make a living in this business. This is what we do day in and day out. All right. Last key piece of news here before we get into some trading levels with the subscribers. Snapchat. It went IPO on Friday at $17 a share. Traded as high as $29 on Friday. Before giving some ground back, now trading back into the $27 range. $27.09 was the closing price on Friday. So from 17, IPO initially oversubscribed by 10 factor. It means for every 1 share available Snapchat, 10 traders wanted to get their hands on it, or 10 people. So that's an oversubscription of tenfold, essentially, at the $17 per share price. It opened at 24, traded up to 29. Now it's back down in the $27 range. Watch for the company. The stats are pretty interesting on this. Robinhood trader reported that a lot of the investor base that's buying into Snapchat are the millennials and younger age crowd, which makes sense because that's who uses Snapchat. Right? They're not targeting my demographic. I have Snapchat, but I'm the most boring snapper. I Snapchat myself walking to the gym saying, I'm going to kill chest and arms today. And nobody replies. So I guess I'm not their target client per se. But interestingly enough, the investors in Snapchat have also been the millennials. Average age being reported of shareholders that bought into this trend is 26 years old. Watch for this. Watch for Snap. Remember, China has, if I could just recap it all, China's reported a bit of a lower GDP number. North Korea launched missiles. That's putting some negative side pressure on the markets. Deutsche Bank looks like it wants to open a little bit weaker. Janet Yellen and Stanley Fischer's speeches that are hawkish are putting some downside pressure. So it's going to be a very, very interesting open. All right, for today's economic news, I just pulled them up here. We got absolutely nothing. One thing you got to watch for, 11 a.m. U.S. Treasury's 4-week bill announcement. That's going to shake up the fixed income market. And U.S. Treasury 3- and 6-month bill auction. So there's an auction going on at 11:30. So at the last hour before the European close, watch some volatility in fixed income markets. There's going to be opportunities to trade there. Speakers, Kashkari hits the wire at 3 p.m. Eastern from the Fed. And then after that, it's a blackout. There's no more Fed speakers until the March 15th policy meeting. So that's something you need to be aware of. Key news for this week. This is the one thing that you need to pay attention to for the remainder of the week that you're trading. All right? It all comes down to this. Janet Yellen wants to raise interest rates. What she's repeatedly said she's concerned about is twofold. Number one is inflation, right? And number two is wage growth. Well, guess what, traders? Inflation's starting to go up. All right, we're seeing inflation prices start to inflate. Inflation's creeping up into the market. This puts a second thing on the board, which is wage growth and the employment situation. Well, we have a key stat this Friday. Who's calling? Oh, we have a key stat today, this Friday at 8:30 in the morning, and that's the non-farm payrolls. It wasn't the first Friday of the month because the way the Bureau of Labor Statistics does it, the reference week is the week that includes the 12th of the month, and then it's 3 Fridays after that that they release the report. So occasionally it ends up being the second Friday of the month when the 12th of the month trades within 3 weeks in the previous month. Rewind that and try to make sense of it. It's confusing, but this Friday is a big report. This Friday we find out what are jobs doing. It's a threefold release. What's the unemployment rate? How many jobs have been added in the private sector? And as well, how much have wages grown? Hourly and weekly is the key statistics you need to watch for. And then we'll see. If we get a good jobs report, that rate hike odds for March 15th are pretty much shooting through the roof to 150%. I know it's impossible. Those guys that did statistics and ladies of that statistics are going to laugh at that, but it's pretty much locked. If the employment report whiffs, then from there we'll see. Odds will drop a little bit. Equity market might react to that in a positive light, a positive sentiment. So let's watch out for the open today. Markets look to be a little bit weak going into the open. Let's follow that. Let's see how the first 15 minutes trade, and let's take advantage of this opportunity. We're going to go now to the subscriber piece. We're going to look at some levels. I'm going to pull up my charts and show our traders here what to watch for. What is the NBT? We practice a concept called NBT, and I'm going to share it with you briefly. NBT stands for next best trade. What you always want to do is have a piece of paper handy. You literally go archaic and old school and write it on there. If you want to save paper and you're a tree hugger, I salute and commend your efforts. You can do it electronically as well, but make sure you watch it and check up on it. I promise I recycle despite having paper. The NBT, the way it works is you write your next best trade. Create a set of criteria. What does it require? What's the requirement of me? What am I required to see in the market before I click the trigger and invest my hard-earned money into an opportunity? It literally goes 1, 2, 3, 4. When you get those check boxes, that's your next best trade. The reason I like this practice is it forces patience. It forces you to wait for the trade to come to you. One of the biggest reasons the retail crowd loses money in the market is trading on emotion. The NBT focuses more on logic, on risk management, discipline, patience, and diligence. Have yourself a great day trading. I invite you to come out and sign up for a trading room and have a look and feel. It's absolutely free. Come and trade with us for the rest of the day. We trade from bell to bell. We trade in futures markets. We trade gold. We trade silver. I did natty gas the other day, which is natural gas. S&P 500 futures, crude oil. We trade opportunity. And every single trader out there trades opportunity. It's not one market. It's the market that moves. I invite you guys to come out and have a look at what we offer. Come into the trading room. Try out our education.
15 minutes now to the U.S. cash equity open. U.S. equity futures continue
Let's hear what they're saying.
Modestly lower open, down about 0.4%. The S&P mini is 2372.50. The low is 2368.
There you go. Update. All right. So they continue to see some weakness in the open.
10-year yield at 2.48%. Prices have moved a little bit lower near the lows of the session. 2320 happened. U.S. 10-year no future.
All right, 15 minutes to the U.S. Open. I'm going to leave it out there for you guys. Put your questions in the comments. Please subscribe below. Every morning, we're going to give you a morning update with the key news driving markets, what to watch for, what sentiment feels and smells like and tastes like. In trading, it's really a real thing. It's a living and breathing market. In the morning, you can start to sense it. The longer you're in this business And take this from a guy that's been doing it for over 15, 14 years now. More, longer than that. I don't even keep track of time anymore. Take it from a guy that's been doing it for a really long time. The market starts to exhibit behaviors and you're able to get a sense of them. It starts to be a little bit of an art. I know it's neat to expect a checklist, but always look for the artistic side of things. What are emotions in the market? How would you feel if you're a large trader that just bought up on this rally? And start to look at it from the other side. Because you're not trading yourself, you're trading the mass psychology. You're trading the shift in that psychology. So guys, come out, have a look around our website. We have futures trading course, which is literally designed at proprietary trader level. This is professional education. You're not going to learn stuff like this anywhere else because it works. In 2017, to trade the market, it requires a whole different set of tools that you're not going to find online. I haven't found them, and that's why I teach them. You won't find them because they work. If you're looking at technical analysis, chart patterns, if you're looking for waves, Elliott waves, if you're still counting them, that tends to work occasionally. If you're looking for an RSI as a trigger to get you in, you're looking for something that's too neat. It'll never come in practice. It's great on paper, but good luck with that strategy in the live market. What you need to follow today is order flow, the shift of supply and demand, and to be able to track that and take advantage of it. That's how the money's made in 2017. There's a lot of short-term volatility. We're going to exploit that and take advantage. Have yourselves a great day. I'll see you guys tomorrow at 9 a.m. I encourage you to check out our website and our live trading room. Subscribers, give me 1 minute. I'm going to end this broadcast, and we'll go in, look at some levels, and set up some trades for the morning and trade the opening bell. Take care, YouTube. I hope you enjoyed this broadcast. Please leave your comments below. And questions, I'd love to help you out. This is what I'm here for. I'm here to work with you guys. And I'm here to take the professional money and put it in the retail traders' pockets. I guess you could call me Robin Hood myself. Take care. All the best. Let's make some money. We're getting close to the open. I got to go. Thank you. And I hope you enjoyed our first ever morning market update. Goodbye.